you for taking the time to find out more about the fund. Over the next few minutes, we will answer some of the questions that we've often been asked. The Orchard Fund invests via a proven investment strategy in large, blue-chip international companies, many of which are household names such as Coca-Cola and Colgate. We focus on high-quality companies which are proven to outperform the wider market over time, especially in bear markets when you need it the most. The fund strategy reduces risk on the downside while still capturing growth and expects to deliver a positive return in most market conditions. We aim to pay a sustainable income to our investors of approximately 6%, which makes the fund attractive not only for those seeking solid returns with low volatility, but also for those looking to provide for income. The Orchard Fund has a proven 13-year track record of delivering attractive returns for our investors in excess of our benchmarks.
We only invest in large-cap blue-chip international equities. Companies with a positive free cash flow, pay a dividend, have high barriers to entry, and maybe low levels of debt on the balance sheets as well. These are like household names you may have heard of, people like Coca-Cola, Apple, HSBC. We tend to avoid the hot fad stocks that you may read about in the columns. We're trying to create a portfolio of stocks that we're happy to hold, even if the market's shut from 10 years.
The major benefit of the Orchard strategy is it can make money in the majority of market conditions. For a long-only manager, if the market goes up, they make money. If the market goes down, they tend to lose money. The Orchard strategy can make money in rising markets, static markets, and even gently falling markets.
From the inception of the strategy, it was designed to minimise losses while still participating in the upside. So we targeted to try and always gain 70% of all performance in rising markets, but only expose ourselves to 30% of falls in negative markets. And over the 13 years that the fund's now been running, we've managed a good job of that, capturing 68.5% of all positive moves, but only 28.4% of any falls.
We've been running this strategy for 13 years, and in that time there haven't been any occasions where we've actually felt it wouldn't be possible to pay the 6% yield. We make our money from the interest on the cash we hold, the dividends on the stock that we hold, and the option premium on the commitments that we make. We feel very comfortable that we're going to be able to sustain that dividend yield.
The fund ideally is suitable for long-term investors, whether they be institutional or retail clients. Investors who are looking for a low volatility fund that pays a robust dividend stream. Ideally, the fund is like a safe sleep at night fund that will offer a high degree of downside protection in falling markets, but you won't miss out on the upside.
I was one of the founders of the strategy. I've been running the strategy for 13 years. Matt LeCornu joined me in the last year to help us strengthen the team, to allow us to look at more stocks and to ensure that we maintain the record that we've achieved over that time period.
Even though with the fund we try to minimise volatility, volatility is also our friend, because the higher volatility is, the more we get paid for entering the commitments we do to buy stocks at a future date. So our ideal is if volatility is high but falling.
We hope you found this video useful. If you require any further information, please contact your independent financial advisor or visit our website www.orchardwealthmanagement.com, where you will find our latest fact sheets and market literature.